The Tesla breakout continues. The stock now is up about 3.5% today. I ended up closing out my March call options for a $450 strike for a $32,000 profit. And in this video, we're going to talk about why I closed this position out, what new position I just opened because I'm still very bullish on Tesla, where I think Tesla is headed in the next couple of weeks, and more importantly, the insane call options that have continued to come into Tesla over the next couple of weeks, because it looks like on top of our analysis, Wall Street and hedge funds are also expecting Tesla to continue to break out. So we're going to cover all of that and more in this video. If you don't know who I am, my name is Peter DiCarlo. I've been trading full-time for the past 11 years. I've grown my fund to over $5 million in profits. I trade a very simple system that does not take into account the fundamentals of a company, the news, or anything that's currently happening in the market. Everything that I do is based entirely off of my trading system and my strategy. This allows me to effortlessly trade because I always know what I'm doing. It allows me to block out all of the noise and stick to my strategy. Now, with Tesla specifically, over the past couple of years, this has been one of our best stocks. We are up close to $2 million in the past couple of years on Tesla, with a 64% win rate and a 2.3 risk versus reward. So this right here will show you alone that you do not need to be winning each and every single trade in order to consistently make money in the market. And that is probably the biggest fallacy that we see out there. So many people believe that they have to be right all of the time, but the reason that I make these videos literally each and every single day for years and years and years is to show you what real profitable trading looks like. There are plenty times that I get on here and I'm completely wrong, but the most important thing is that when we are right, we get paid 2 to 3 times what we lose when we are wrong. Now, the most recent position that we have had on Tesla were these 3/20/2026 $450 calls. I closed these out today for a 25.5% profit. And the reason for that is when I bought these call options, Tesla was trading down around $400. What I will normally do is when the stock gets above my current strike price and then my option becomes in the money, I will close out that position for a profit. Then I will take about 80% of that position and I will go into a new position that's either further out in time or further out within a strike price. The reason that I do this is, number one, when I close out the position and I roll it, meaning I open a new position, I take a smaller size, which means that I'm taking profits along the way while still having exposure to the upside. You can see in September alone, we rolled many positions and closed out about $128,000 in profits. Initially, we had 3/20/2026 $400 calls. And once those were in the money, we closed those out and we rolled those into $450 calls. Now we are rolling these out into $550 calls. So you can see here that the new position we opened now expires 4/17/2026. Now we have a strike price of $550, and we ended up going in with 15 of them for an average price of $50.80. And since we got in, the stock is actually up about 1%. If you want to learn how I roll options and more importantly, how to trade options in a responsible manner, then you can go ahead and check out our free trading library. The link to our entire trading library and all of my indicators and reasons I enter and exit positions is down in the description for free. But the options section will be under step 4, and the beginner options simplified course will be right here. Now, basically, since July, we have been calling for a potential breakout on Tesla to end the year at about $500. And we are very close to that happening as of right now. You can see that we're only about 8% away from our target. But the main reason that I'm still holding on to such an aggressive position is predominantly because there's been a lot of buying pressure coming into the options market. And that's really what I want to go over today, is not only the big unusual options flow that came through over $3 million for these 4/17/2026 $550 calls, which are the ones that I bought as well after that whale entered. But I also want to go over all of the historical flow that we have seen on Tesla in the past couple of weeks. Now, first and foremost, what is flow? When I'm saying this word, what does this actually mean? So, flow is just the recording of options trading hitting the market. So, a flow is basically one or two, sometimes it can be 20 options orders that are hitting the market in a cadence. This is important because it's going to show us where money is moving. Now, the reason that we care about options flow is because hedge funds don't leave clues in the stock market. It is very hard to watch time and sales and find unusual buying because there's just so much noise that's happening. But in the options market, when millions hit the tape, it stands out, and this can trigger an alert that we see as a potential reason to enter a trade. So if you follow that and you see where the big money is betting before the stock moves, then you can get in before the breakout happens. Now, if you want to learn how to actually find this flow, how to break it down in detail, everything that we're going to go over in this video is talked about in the Options Flow Mastery, which is also free and a part of step 4. Now, when it comes to unusual options flow, there is a lot of noise and a lot of bullshit out there. And I need you to understand going forward that about 90% of options flow is entirely worthless. This is because we could have an institution who's hedging a position. They could be opening covered calls. They could be doing a random lotto trade. If you were to chase each and every single alert that comes your way or that someone posts online, you're going to burn out your account. Now, we have started an options flow account within the past couple of weeks that right now has about a 93% win rate. It's not going to stay there. It'll probably go down to about 75% and about a 17-to-1 risk versus reward, which I think will also go down. But this is up about 68% in the past 5 weeks. And it's because we don't just take any trade that's in front of us. We focus very deeply and very precisely on the criteria that we're going to talk about in this video, which brings us to the most important part. What is the 10% of flow that actually matters? When we are looking at an order or an unusual flow, there are 3 main things that we want to see. The first is size. So we need millions of dollars coming into this option, not $20,000, $30,000. The second thing is we need time. So there can't just be one random buy. There needs to be a bunch of buying at one specific contract with, of course, size. And the most important thing is going to be urgency. When the flow comes in, there are 2 specific letters that we really want to see, which is going to be A and AA. This means that they're coming in at the ask or above the ask, and it means that they are overpaying currently to get into that position. And the thing that you have to understand is that they are going to overpay, then they're expecting a serious move to happen within the market. And as we said, if the contract is not bought at the ask or above the ask, then to me personally, the flow is worthless. I don't care about it because we cannot confirm that it's actually a bullish position. And if we cannot confirm something, then there is no signal. There's no reason to actually take the trade. So let's now talk about the options flow that came through today on Tesla. And this actually came through at about 10:13 a.m. I alerted my community and X. And this is the exact position that I just entered into. Now, the 3 things that we just talked about, you can see are highlighted on this order flow. The very first thing is time. So the expiration on these contracts is 4/17/2026. For swing trades, I only care about flow that has expirations either multiple weeks in the future or multiple months out into the future. If this contract expired this Friday, I don't care about it. It's usually noise and it's not important to me. But the fact that these calls expire in the next couple of months gives us an idea that they could be expecting price to maybe move up to $550, maybe even $650 in the next 3 to 6 months. Now, I know that sounds crazy, but if they continue to buy into this breakout, then I don't care about what sounds crazy. I care about what these individuals are doing. The second thing is size. So look at the total volume and value of the order. We care about blocks that have millions of dollars coming into these positions. So the bigger the order, the stronger the signal. This one order was for about $3.2 million, which doesn't sound like a lot if we're talking about buying shares. But when it comes to an option, this is a sizable order. And then the most important thing is urgency. So if you check the detail section of these orders, you must see _A at the end or _AA, which means that flow came in at the ask or that flow came in above the ask. So if it's not above the ask or at the ask, then it could be somebody selling a covered call. So if that underscore A or AA is not there, then we don't care about it. But in this instance, all of this criteria is being met for us. Now let's just look at the past couple of weeks of options orders that have been coming through. If you're a part of my private Discord community, then you know what this is. This is basically our student dashboard that all of our community members get access to. And under the unusual flow section, we record and log all of this unusual options activity so that we can go back and see when that flow happened and what the specific order was. If I search through all of this flow, we can see what the most recent orders were. 7 hours ago, we can see that that order we just went over in detail hit the tape. So this is a good sign. Then back here, a day ago, we had another Alpha Gold order come through. This time it was for 11/21/2025. These call options are up a lot already. You can see as well that 5 days ago, we also had 11/21/2025 $500 calls. 9 days ago, we had 2027 $860 calls. So they've been continuing to buy call options into this breakout for multiple weeks and multiple months now, which is a very good indication that they think the breakout is going to continue. Now, that leads us to probably the most important question, and honestly, the question that we cannot simply answer, which is how far is this breakout going to go? How realistic can this breakout become? And the truth is, there's a couple of things that we can take into account, but I don't fully know how big this breakout is going to be. This is why I'm constantly focusing on reducing my position size, but still playing the breakout. Because there's a chance that this just continues to run over the next 6 months up to $625. And if that happens, I want to be a part of it. But I also want to be taking profits as this breakout is occurring. So let's talk about the two major price targets that we have at this point. If we look at the weekly chart, the first major price target that we have, and if you guys know, this was my low price target for 2025, is about $500. And this is for a couple of reasons. Number one, this is where our previous all-time high level was. So in most cases, when price pulls back into a smart money zone, which we had here, in April of 2025, price is going to break out into a previous high or an equal high. If you want to learn how to spot and draw these smart money zones, that is part of step 3 within our trading system. Smart money zones are extremely important because the market is always going to be moving within a wave-like pattern. We're going to get massive breakouts followed by pullbacks into another breakout as long as market structure is bullish. And so our goal is to identify these smart money zones and start to trade these when price is pulling back into that discount range. You can see that back here in August of 2024 was a big smart money zone. You'll also notice that right here was another smart money zone. So when price is pulling into these smart money zones, this is basically our area of interest for us to start trading the next breakout. So if we know that price will normally pull back into that smart money zone, price will normally at least push into this previous swing high, and best case, maybe into a higher high or a premium market. So that's why I think that $500 is going to be our potential resistance before price could pull back one more time, and then most likely bounce and break out again into the rest of 2025 into early 2026. Now, our secondary target and the quote best case scenario here would be a parabolic breakout, meaning an insane rally that does not pull back. In most cases, that target is going to be this second band. It might be harder to see on my screen within our fair value bands. So the last time that this happened and hit was actually back here on December 16th, 2024. In most cases, price will push up into that band and quickly reject. This is basically an extremely overbought condition. And you can see here that normally when we hit this top band, I'll take about 50% of my profit off of the table. Worst case, price will normally pull back down into support and then break out again. And if we go into a massive breakout, we will hit that second deviation band and then we fully take our profit. So in order for me to fully remove my profit here on Tesla and just continue to play this, price would have to move up to the second band, which would be about another 36% move. So, best case scenario, I think that Tesla just continues to run up to about $630 by the end of this year. We just blow the top off of everything. Worst case scenario, I think that Tesla ends up rejecting somewhere between $500 to $525, pulls back down to about $350 or $400, and then breaks out again to about $650 by most likely Q1 to early Q2 of next year. So ultimately, I do think the $500 target by the end of this year is going to happen. I still stand by my best case scenario of $650 by the end of this year into early 2026. And I will continue to play this breakout and continue to hold my call options. I hope that this video helped. As always, if you want to learn our entire trading system completely for free, the link to our 5-step trading system is down in the description. Over there, you will get access to all of the indicators that we went over in today's video. You will learn about charting foundations, the psychology of trading, how to find smart money zones, volume profile, and more importantly, how to trade options and read options flow. I hope this video helped. I'll see you guys next time.